money market rates in Nigeria are expected to inch up today as bank funds for the bi-weekly Retail SMIS auction are expected, and that's according to Access Bank. And we're now joined from Access Bank by Taiwo Olajubu, a team member of the Treasury Coverage department within Access Bank, to give us some perspective on that market. Thank you so much, Taiwo, for your thoughts, for joining us today. So first of all, if we can talk about the OMO auction that was held yesterday. We saw the outcome. What are the biggest takeaways for you, and what can that tell us about the outlook for interest rates moving forward?
Okay. Good morning, Wale. Thank you for having me. So regarding the OMO auction yesterday, on Tuesday, there was an OMO maturity of about 310 billion. And yesterday, a total of 50 billion was offered, but 41 billion was sold. And we've noticed that for quite a while now, the volumes that have been sold on the OMO space has been really low, and the rates have remained constant for almost 2 months now. It's been 7% on the short end, 8.5% on the medium term, and 10.1% on the long end. We don't expect to see any change for now. We think the CBN is comfortable floating the OMO rates at these levels, albeit there was the NTD auction on Wednesday, and we saw the long end drop by about 10 basis points from a close of 9.75% at the last auction to 9.65%. Although we cannot actually say that we see a downward trend in the yield curve, but we would wait till the next auction, which is in 2 weeks, to be able to say what trend market is going to take. But by and large, I think usually always the volume, the subscription that drives down risk, because subscription for the NTB auction was over 200 billion, and the CBN only sold 123 billion.
A lot has been made about the central bank adopting the NAFEX rate this week at the shortly after the MPC meeting, but while we unpack the significance of that later on, can you just review for us activity in the I&E window, which we know the central bank has created to improve liquidity in the official foreign exchange market?
So for the I&E window, rates have remained at 4.11 for a while now. In fact, since the start of the year, the I&E window rate has remained at 4.10, 4.11 levels, and liquidity has been sort of tight, but the CBN has deemed it fit to intervene for the foreign portfolio investors at least twice a week. So we expect them to begin intervening for the local as well. And for the adoption of the NAFEX rate on the CBN portal, it triggered market sentiment, and a lot of people concluded that there was a major devaluation, albeit rates have been at 4.10 levels since December 31st, but the CBN official rate was maintained on their portal, and typically it's used for budgeting purpose. But going forward, what it means is that the NAFEX rate will be adopted for any government purposes for budgeting. And this also signals that there is now a general convergence in rates, so we don't have different rates at the I&E window or different rates in the FX market. So now it's just uniform. We have the NAFEX rate, which is adopted for all transactions at the I&E window.
Right. You've just mentioned one of the key implications of the adoption of the NAFEX rate, which is that various government agencies and, of course, state governments will be exchanging their dollars, if you like, at that rate. And I wanted to hear your thoughts about what that could mean for liquidity in the financial markets, because that implies that more naira potentially will be hitting the markets.
Well, yeah, I agree with you, and that's regarding the fact disbursement, or conversion of the crude oil receipts. So we expect to see more in terms of the conversion, in terms of the naira proceeds that would hit market.
All right. Quick view on the outlook next week. How do you see rates trending, especially in the T-bill space?
So for the T-bill space, given that the rate on the long end dropped from 9.75 to 9.65%, there's been focus on that 1 year paper. So we still expect to see, some sort of buying sentiment, and we expect that the rates would trend downwards. It would dip. It can trend downwards to 8% levels.
And if I can take you quickly back to the I&E window, can you speak to how much liquidity we're seeing in that market? Over the last few weeks, what do you think is significant in terms of the trends that we're seeing in terms of supply and demand for foreign currency?
I mean, for the INE window, we've seen an upward trend. I mean, year on year, this time last year it was, dipping, but now we've seen upward trend. Like I mentioned earlier, the central bank has been intervening in that space for foreign portfolio investors, and we've had a lot of customers inflow funds to also settle their obligations, as well as the exporters selling into that market. So on the average, this week we saw about $300 million. It peaked about 423 sometime during the week. $420 million.